Good evening, everybody, and welcome to another edition of Live Market Analysis. It's the 1st of July, start of the new financial year. And, I was going to say, I trust it'll be a good one for us. Look, I'm confident it'll be a good and prosperous one for us if we can just follow the trend, stick to the plan. The disclaimer before we get started tonight says that everything we're going to discuss is information. It's general information, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The other thing to remember is that trading, investing is risky. Markets might not go the way you want them to, and you could lose money no matter what happens. Please understand, it's you who makes your decisions about your money and not me. You're responsible for everything you choose to do. The agenda for this evening is to look at your charts of stocks, commodities, bonds, indices, anything you're interested in, let me know about it and I'll give you my best technical analysis reader. Or it could be anything about the 3 M's of trading, that is the methodology, money management, or the mindset. I'm going to kick off by heading over to the AMI broker screen and do a very quick whip around the grounds while your requests are rolling in. I'm going to kick off with Nasdaq, which determines our portfolio management model. I think it's been pretty trusty up to this point, hasn't it? I mean, there have been vibrations in other major indices. For example, the Dow, it's largely sideways. If we looked at our market, largely sideways also. But the Nasdaq is still very much short-term uptrend, long-term uptrend, solid price action, rising peaks and rising troughs, and predominantly white candles. These are the 3 tent pegs, the 3 pillars of my price action and trend model. We can see there's some supply up here at 17,937. It's evident not only here in this candle and a little bit of a follow through here, but on Friday's candle, extremely evident that there is supply up and around that level. Anything really above 18,000 looks like there is some latent supply in the system. Latent meaning it's there when it gets the opportunity. The opportunity is demand coming in and bidding for stock, and that supply is saying, thank you very much, I want to get out, and your demand represents my ability to do that. Closed on the lows on Friday, and I think the confirmation of that point of supply indicates that, what happens? We can see clearly up to that point, lots of demand, a bit of supply coming in. What happens when a bit of extra supply meets an environment of prevailing excess demand? You get equilibrium. So I wouldn't be surprised to see us go sideways tonight. Next candle, maybe not the candle, maybe not the night after that, because we've got the Thanksgiving holiday coming up, 4th of July, but then the candle after that, which would be Friday's candle, we might even see a pullback into the light green zone. I'm not going to go any further than that because it doesn't really matter. We'll see what happens when we get there. And if we're going to fear the future, what we're going to do is we're going to jump at shadows in what is ultimately a very good trend. So I can't see any reason to move off our full risk position at this stage. If you're a little bit nervous, don't add any more risk. Okay, just stick with the risk you've got. Be really vigilant at trailing stops or looking for points or candles that indicate supplies coming into your individual stock positions, and being aggressive on getting that risk out if there's a reason to do it. Okay, maybe don't add risk. If you're not worried about it, I'm not. Look, I can see it. I'm there. It's there. I know about it. I'm not too worried about it. I'm happy to go FRP. And if there is some good risk to add tonight, then I'm happy to do so. Okay. If you've read any of my tweets over the last few days, it has been very much about controlling what you can control. So we can control how we react, how we respond, how we apply our methodology, but we can't control what happens. And that's it. And so stop worrying about what you can't control. I can't control that next candle. I think we'll go sideways for a bit, but we could rocket higher in line with the rest of the trend. So why worry about it? It could be the beginning of the end. And I'll get candles if I'm coming in tuning tomorrow, doing my job. That is controlling what I can control, me doing my job. I'll see those candles and I'll make that decision when I need to. Okay? Otherwise, just let it happen. Let's do a quick whip around the grounds. I did mention the Dow Jones. We're looking for red flags that might push us off this position of full risk position, with a little bit of a toe in. Maybe we're going to go a bit sideways. That's certainly sideways. Is it a red flag? I don't think so. The Russell is more of a red flag. I don't know what's less than red, light red, okay? But it's still not awful, is it? We're still holding that long-term uptrend. And until I see the really bad stuff happening, like breaking beneath it, coming up, testing it, all that turning of the long-term trend stuff, again, got to take it with a pinch of salt. That's still fine. I know we're looking at largely Nvidia and co here, but I'm cool with it. Let's go to Europe. More problems here, and that's exactly what I don't want to see. So if I saw that on the Russell, I'd be really worried about what's happening in America. It's not happening on the Russell, it's happening in France, and we know there's an election going on over there, so we are having some volatility. That's probably more specific to that market. Is it being seen in the rest of Europe? Well, some of it will probably flow through. There's also an election coming up in the UK this week, if I'm not mistaken. More sideways there, a bit like the Dow. Sideways trending down there, obviously getting some influence from the French market, and not looking too great there, very sideways again. So we're not seeing that unanimous vote of confidence in risk at the moment. That's what we're looking for. Are investors embracing risk, or are they running away from risk? It's kind of looking that anywhere that's not the Nasdaq, they're a little bit nervous. Certainly the Hang Seng, we know that continues to go down. Actually, the Nikkei looks pretty good. I did see one of those Japan-based ETFs come up in my scans during over the last week, and I certainly have seen the ETF for the Indian market coming up in those scans. Those two look fine to very good in that order. Shanghai Composite, unfortunately, has bounced. Obviously, last week we looked at it, it was going down. It's gone down a little bit more. It's bounced a bit. That's encouraging. Fingers crossed that keeps going up. Probably not getting much from that. Where does it leave the Aussie market? Somewhere stuck in the middle, isn't it? Literally stuck in the middle, both figuratively and literally on screen. We're vibrating in a range, and it seems like a range that is like the pencil sharpening, isn't it? Getting towards the pointy end. You'll know when you know. When we trade, when we close 79.11 or better, you'll know what's going on. We're going up. If we close, I wouldn't really want to see 76.01 and lower. I think that would be a concern, and certainly below 74.89, it's lights out. In between those, any white candles here are good, and a close beneath, say, 76.98 would be disturbing. Okay, but otherwise, sideways to long-term uptrend there, pretty happy. Quick look at the sectors. Discretionary, one of the better ones, but also very sideways. Energy, one of the worst ones, but trying to rally at the end there. We'll look at crude oil in a second. That's not trying to go up. Financials, I still think looks very, very solid. Your banks, your insurance companies. Gold is neutral at best. It's short-term downtrend, long-term uptrend at worst. Healthcare is fine. Had a bit of a tough day today, but I do think we did see some 1st of July shenanigans. I wrote about it today in the evening wrap. It was a bit of an abbreviated evening wrap because I've been working on a seasonal analysis piece, which I'll release to you tomorrow, about what typically happens in July and August for the Aussie market. But I do think today we saw a bit of an unwind of the ultra short positioning of the worst ASX sectors for FY24 into June 30, and being obviously trading the momentum in the better ones. And we literally saw that unwind a bit today. So healthcare, which is one of the better ones, came off. Information technology, which is the best one, came off. If you're wondering why, you saw those big black candles in WiseTech and REA and a few of those other stocks, which were doing so well. I think this is a lot to do with it. Materials, on the other hand, got a white candle, of course, because it was one of the worst ones. That's resources, property. The funny thing about property is that overall index doesn't look too bad because it's basically the Goodman Group index. But if you sort of go outside Goodman, actually property is one of the worst performing sectors out there. So that got a bit of a bounce today. Staples aren't too bad, not too great. But again, something that's doing well was down today. And XTJ, which is a little bit deceptive because you might say, well, that's been really bad. But actually, if you look at REA and Car Group, which are tech stocks, they've been doing really well, and they were down today as well. So I think pretty consistent. I think the only one that dodged a bullet was utilities, to be fair. Let's have a look at. I might have a look at the Australian dollar. I don't do that very often, but I think there's a decent setup here, and I think it's kind of looking up, isn't it? I mean, that's a really confident, the vote of confidence from Carl. It's kind of looking up. Well, it is kind of looking up. We've got a short-term uptrend in place. The long-term trend is trying its best to turn up, but it is providing dynamic demand at this point. And we've seen a few decent white candles coming off that dynamic demand zone. Hey, there's a few black candles in there as well to means it's going sideways. But it's starting to sort of work its way towards the top of that range, and it's pretty clear cut here. This could be the most obvious, trading zone range breakout in history, but probably closing above 67. It's starting to look good for a move into maybe 68, half 69. So if you've got a CFD account, that might be something to keep an eye on. And I was going to say, look, I'm going to head over to the trading view screen because that's not where I'm going. I'm going here because that's something we're going to look at later on from one of the offline requests, looking at the US 10-year yields. And they have turned up. They've turned up a little bit, but then we look at the Aussies and they've turned up more. So you've got to remember currency. If you're trading FX, it's all about yields. It's not about what's happening on those 5-minute, 1-minute charts. That's just noise. Ultimately, the big trends are made by what's happening in yields and yield differentials. So, currency is all about parking cash and earning the yield of one currency or one country and paying in another. So, funding that purchase from another country. So, if yields in Australia are expected to go higher, go up, at the same time, US yields are expected to come down. Now, that's pretty much what the market's thinking now, because all of a sudden we're talking about RBA hikes and Powell and the Federal Reserve. Big dovish shift over the last couple of months, potentially Aussie rates higher, US rates lower on a relative basis could help facilitate the Australian dollar going up. That allows us to knock off the rates at the same time, but just noting there, we have had a bit of a pop back up, haven't we, on those US 10s, and that is concerning for equities, and also what's happening here, I think, is providing a bit of a drag for us too. And I think considering just how severe that up move was last week, and this was on the back of our CPI data, then I think we've actually held up pretty well on our Aussie equities. I'm going to head back to the AB Broker screen and just knock off those base metals for you. I know we've got a lot of people out there who are invested in commodities stocks, and they want to know what's going on here. So let's pop up the line chart. Obviously, commodities prices have had a really sharp pullback, haven't they, over the last few weeks now, bordering on, I'm almost be able to say months in a little while, but it's certainly extending into multiple weeks, and it's quite an A-shape. We talk about when you sort of see an A-shape, generally those tops tend to stick. Compared to, say, a V-shaped rally, generally those lows tend to stick as well. This is looking a bit A-shaped. It's still a long-term uptrend, though, and maybe we're seeing some semblance of dynamic demand coming and working the system, moving back to higher troughs. I think that's a positive. Also higher peaks. And we'll get a signal really soon on what's going on here. I know I'm waffling on about aluminium, but it's going to be reflected in a few other charts. But if we can see an interaction with the short-term uptrend, push above it, a little bit of a dink at it, showing that it is also dynamic demand now, then we can probably move higher from there. So that's maybe being a bit optimistic. I hope it happens. We're looking at copper here. Aluminium looks way better than copper, doesn't it? Because we don't really have that clear higher bottom pattern here. We're certainly not making higher troughs. We are sort of in that zone of influence of the long-term demand zone, but that's far from convincing on copper. I haven't looked at these today, actually, so I'm a little bit surprising myself with them. Iron ore looks terrible there, but we're going to see another chart where it doesn't look so bad. Nickel maybe just trying to turn the corner there, but hardly anything to get excited about. Neither is lead. Tin is definitely the pick of them, and actually zinc is not too bad as well. So you'd almost say tin's the best, zinc's the second best, then maybe aluminium, copper, nickel bringing up the rear. Interesting move today on the lithium carbonate chart. This literally just published this to the Twitter feed. A pretty decent candle actually today, not a huge move up, about 1.2% from Friday's close. But yeah, look, a couple of nice lower shadows there, high closes, 2 times at a level which in theory should be a significant area of demand from this fixed point here at 89,900. So it could be interesting, I'd say, if we start to trade above. I'll give you a level here, 98.1 on the November contract. Now you should be looking at the November contract only. The July contract is hardly trading anymore. And then say over 100.050. Close above, obviously the higher the better, but watching those pressure points could facilitate a little bit of a turnaround, or at the very least, maybe a stay of execution from the inevitable. Let us go back to the trading view window and just complete the whip around the grounds by looking at silver, which is getting a little bit of a bounce there from that 28.73 to 29.29 zone. I'd say that's probably more sideways. It's equilibrium. We're seeing what now appears to be a substantial amount of supply meeting what was clearly a substantial amount of demand to come together. Price has to go sideways. Gold is very sideways, a little bit of a bounce there from 23.0408. And copper is similar to the other one. That's probably the weakest out of the lot, but we are seeing a pretty decent bounce actually happening here on iron ore. That's encouraging. Closing above the short-term trend ribbon, doing a little bit of a dink there as well. That's important, and maybe that can, I think that candle is close. I think we're in the clear there, but any sort of follow through here would be welcome, and could certainly facilitate a move back up to the dynamic resistance of the long-term trend ribbon and into 114 there. If we close above 114, we're in something far more substantial here. That's encouraging. Having a quick look at uranium. Hopefully, again, fingers crossed. I don't want these things to go down. Some people might be going, hey, Carl, when you talk about uranium, I just wish you'd shut up because you're making me nervous. I'm just calling it as I see it. The trend has turned here, and certainly the short term is a short-term downtrend, make no mistake, and the long-term uptrend is just hanging on. You know that because the indicator's gone amber, and we're starting to see some problems getting out of that long-term trend zone, which in the past has offered some dynamic demand. So I'd almost argue now it's offering dynamic supply. Close beneath sort of 82.80-ish is going to spell disaster for this one. I really am concerned about that, but hopefully it goes the other way and gets, say, a close 87 or better, and we're actually then making a double bottom pattern in this zone, and maybe we can go a little bit higher. So a little bit sort of hanging in the balance there. Let's head to crude oil, which is actually, I think looking good is probably too strong a statement here, but it's certainly looking better. Ultimately, this is a very sideways pattern. So if you're trying to trade in here, that is between 92, whatever that is, and whatever that is, 66 something, there's really no trend. But it's looking better than it was a couple of weeks ago. And to be honest, when it starts to look good, that's when it tends to look bad. And when it looks bad, it tends to look good. So it's not something I'd really waste a lot of bandwidth on. Brent crude looking pretty similar, but we can see decent move here by over 10% really has facilitated a modest bounce in the XEJ. It's just putting it into perspective for you. There were 10% bounce in the main energy contracts there. Not really facilitating much of a bounce in the XEJ. I think that's it. Going to go to your offline requests. I can see a few of your online requests coming through. That's fantastic. Keep the questions rolling. I'll get to them in a second. First of all, I'm going to go to Anton, who's got an Aussie stock for us to look at. And we are going to look at Capital Health. And I must admit, Anton asked me to look at this last week, but the request came in a little bit late. I didn't get to see it before I got started. But, I mean, what I would have said to you last week is I would have said it's fine. It's roughly where that blue line is. And I'm going to say it's still fine today. I know that's not an ideal candle, but it's not completely out of kilter with what we saw across many stocks that have been doing well into that June 30. July 1 is very much a hangover day. So I want to get another candle rather than sort of responding to that. I just want to see how the next candle turns out, because you can often find that they tend to right themselves the next day. That little bit of fund movement, works its way through the system. They kind of get the job done, or maybe even it takes them a couple of days, but generally, it kind of works itself out. So look, if you've got it, I could certainly see a reason to hold on to it. I wouldn't obviously be buying more today based upon that last candle that we can see. But prior to that, it ticked all the boxes. Short-term uptrend, long-term trend was just turning up. A little bit of a gap here. I was saying gap and run, not quite gap and run on that day, but certainly managed to do it the day after. Closed above a big point of supply. We zoom out to the weekly chart. Well, we are in a zone that could create some problems. I mean, really, anything from there could be problematic. And then I'll just draw a line to show you just where the sort of the bottom of that zone sort of kicks in, because there might be a little bit of something here, but no, it looks like we're through that. So, it was until literally today's candle looking prospective to move into sort of a 33, 34. And I think that's another reason why I wouldn't buy it. Obviously today's candle rules it out, but there's another reason there why I wouldn't buy it. It's just a little bit too close to what could be a pretty significant point of supply. But happy to hold and see if I can get there, because it's not guaranteed that that's supply. We think it will be. We won't know until we see the candles there. So I don't want to be pushed out of a position where there's potentially a bit more in it. But I can't see a reason to get in for you, Anton. Roscoe has asked about that crude oil tweet again. Ross, I think it came in a bit late for me to get to it, and that's Capital Health. I need to go back to here. So Ross, you said, can I sort of expand upon this particular tweet, which is actually relevant as we just looked at the crude oil chart and how it had rallied about 10%. And Citi here saying that we're seeing some seasonal tightness in summer. So in America, it's their summer, obviously. They have their summer during their holiday season. Over summertime, they do a lot of driving. You would have heard it would been referred to as summer driving season, tend to increase their usage of gasoline and therefore also by definition crude oil. So that's that seasonal tightness they're talking about, especially on the crude oil side. Short positioning is setting up for a pickup in prices. So probably shorts are starting to cover back a little bit, but Citi saying that they think that this rally is nothing but an opportunity to continue to sell. So if you're a producer, sell your product. If you're a trader, you could fade that move up and look to continue to trade short. While I'm here, if you haven't seen it already, look, they might be of value. They might not be of value to you, maybe a little bit cryptic. They make sense to me, because this is kind of my philosophy, what I live, eat and breathe in the markets. But we talked at the start about this idea of control, of what you can control. And there's a couple of tweets there on sort of explaining some of my logic on that. So, it might help you or it might not. That's why I'm going to keep moving. Let's go to the rest of the US stocks offline. So I'll get to those later. We'll do Brett's YAL, which is looking fantastic. I know there are a certain type of true believer here on Yancoal. They are diehards. I don't know if that's you, Brett, diehard Yancoal. I'm a diehard Yancoal fan when it's looking like it is, and you won't find any more diehard than me. And what we can see here is, I guess, some previous talking about it. So plus 1/3 there. I might have been asked about it on this candle, and I said plus 1/3 full risk position. I don't know what happened here. I think, look at that. And I do this quite often, don't I? And then we don't look at it for a while and I come back. I'm just going to move that out of the way for a second. And I drew a line under this trough here. And we must have been looking at it literally here or here. And I drew a candle. You can see I drew that candle. I said, I would have said something along the lines, if you see that black candle and it closes beneath that trough, that's when you're starting to manage your risk. And one of the points I've been making on my tweets, and it got a particular person upset, and I didn't mean to upset this person, but I said that if you get something right, it's not skill or luck, it's not intelligence, it's just coincidence, because you can't control the outcome and you can't know the outcome. You say, Carl, I knew what was going to happen. Yeah, right, mate. If you're telling me you know what's going to happen, then you've lost all credibility with me. And anybody who says, look, this is, value investors are the best because they do it. They say, this is what this thing is worth. And, I've got a really high conviction about this. And the market will see what I see. I just think it's such a foolish way of going about your investing, because you don't have control. There should never be an illusion of control. You're going to get what you get, and you just have to put up with it. So my point is, and if you can get this, the gist of this is, if you get it right, don't think you're a bloody genius, because you're not. The price just went in the direction that you bet. If you get it, but by the same token, if you get it wrong, don't beat yourself up, because you're not stupid either. And you're not wrong either. It's not wrong, you just lost money, okay? It's not wrong to lose money. If you keep thinking in terms of, I lost money, therefore I'm wrong, you've got some real problems. Think of it as, I lost money, but I'm not wrong. And when I make money, I'm not right either. There's no wrong or right, because the outcome was a pure coincidence. Oh, but Carl, that had to happen because of X, Y, and Z. Please stop saying stupid things. Anything can happen. The future is unwritten. If you get it right, it's a coincidence. If you get it wrong, it's a coincidence. So stop thinking in those terms. It just is. Control what you can control. Control your method, control the application of that, and get on with the freaking show, mate. My point is that, oh, look, it turned out that I was right. That's a stupid thing to say. It turned out the price went down. It was a pure coincidence I was right. But anyway, that's where you would have potentially got out of some of it. I know I'm on a bit of a rampage today, aren't I, about this, but it's just so important we get this right. So you would have reduced your risk there. I think even by here, you probably were completely out of it. And you might have ended up with a break-even trade, or nothing more than a small profit on that one. That would have been disappointing. But then I think here and here are some good reasons to get back in. Certainly here, definitely there, and obviously here. And I've been obviously running it in my feature charts for the last few days. So yeah, some consolation if you kind of got tagged on that bit. At least you're back in it here, and that's kind of the model as well. We're in it for a good time, not a long time. And if you don't like the model, you don't have to use it. That's the other important thing to remember. What are we doing now? So here, this is obviously a latent supply zone. This is really important, this idea of latent supply. And I probably don't, I say latent, not like Leighton Hewitt, come on, but latent. So I do say it from time to time, but I think I should always refer to a supply zone as a latent supply zone, because we don't know it's going to be supplied until we get there. Yes, we can see that in the past it was clearly a supply. Like there's no confusion that this was not just a supply zone, it was a major, just ginormous supply zone, right? There was a bunch of supply up there. Even look at the volume. Like a lot of people sold up there, and at the same time, if a lot of people sold, a lot of people got stuck in too, and they really regret it. So there's this latent supply. There's this possibility that some of those people that have been stuck in it this whole time, praying, please God, just let Yancoal go up back to $7 where I got in, that they might get out. But then they might not as well, because they love narratives, all right? I know nobody here trades on narratives anymore because you've been hanging out with me too long. But some people love their narratives. It's got a good dividend yield. It's trading on 1.2, times enterprise value, or free cash flow, or other dumb stuff that people say like that to make them feel better about their intelligence levels, okay? When, like I said at the start, you don't get it. If you make money, it wasn't because you're intelligent, because the stock went the right direction that you happened to bet. But some people like to massage their egos and stroke their egos after they happen to make money. Not get it right, because that's a coincidence, but make money and tell them, and pat on the back, geez, that enterprise value was very low. And then the next time they do it, and the next 10 times they do it, it's wrong. The stock keeps going down. They forget about those times. But let me get to the point and tell you that there is no supply in that zone. Well, there's very little. I couldn't see it. How do you know there was very little and I couldn't see it? Because there was about that much supply in it. That tiny little line that's poking out the top of that white candle, that's how much supply was, or latent supply, again, latent supply, was in that zone, which is 3/10 of stuff all. So I don't think we're worried about this zone. And to be honest, I don't think we're worried about this zone here. Okay, so that's probably here, really, isn't it? You probably draw it there. And there's no right or wrong answers here, because anybody tells you there's an exact way to do something, honestly, I think is a bit of a dickhead, okay? It's so meaningless, okay? It is so meaningless what we're doing here, okay? Because the market is going to do what the market's going to do. We can waffle on about points of supply and trying to draw them exactly, right? It's just dumb. There's supply somewhere around there. Why? Because there was in the past. It's getting a bit old though, so it might not be that effectual in the future. I don't know if that's a word, but I'm going to say it is. So we're getting into a bit of a zone. I don't think it's going to look. I think if we're not worried here, we're not really worried about that one either. So I'm really happy with this one. I think that's the bottom line. And that's really all we're trying to decide, isn't it? It's like, do I like it? I'll buy it, you know, or do I have the right reasons to buy it, or do I have the right reasons to get out? That's all it comes down to. I think there's plenty of reasons to own it. I think there's plenty of reasons to continue to buy it. Having said that, guess what could happen tomorrow? That could be tomorrow. And am I right or am I wrong? You know what? Stop thinking in those terms. It was going to happen anyway. Whether you traded it or not, it was going to happen. Do you realise that? Okay, let's keep moving. Whitehaven Coal. Because I think some people I think they're struggling to understand what I'm banging on about on Twitter with this. It's so meaningless. The outcome is so meaningless. Of course, that's how you make or lose money. And of course, it feels good when you make money. Of course, it feels bad. It feels awful when you lose it. I know that feeling, but you have to disassociate yourself from those feelings. Otherwise, you are going to come a cropper. Major point of supply, Whitehaven Coal. You'll notice that Whitehaven hasn't been in my scan list for quite a while. I think the last time I begrudgingly put it in that day, you might want to go check, or maybe that day. And I say begrudgingly because there's obviously this big major point of supply that we've pointed out in the past, but it kind of deserved to be in. I think we're in a very similar situation. I think the important part of this, though, is that we have had a decent first test of that major point of supply, and that's it there. So I think this is a very, very, very decent first test of the MPOS. And what that does is, I think we're more prone as a result of that to having a successful break of that. So the second time around, because same reason. This is about major point of supply. People really got screwed, didn't they? I mean, that's major point of screwed is what you want to call this, because people thought it was going up. You know what? I thought it was going up on that day, and then they got screwed. Now, of course, for me, I'm out by about probably that candle. But other people, they don't get out when they're losing money. They say, don't worry, it'll go back up. It's got a great dividend yield. Yeah, and right about now, they're probably patting themselves on the back and saying, ha ha, see, I told you so, right? But see, I wouldn't have had to put up with all of this. Oh, I knew I shouldn't have bought Whitehaven. Why did I buy more? Bloody stuff, the dividend yield. Oh, it was starting to come good again. I'm okay. I think it's got a much higher probability of getting through. If I had it, I could certainly hold it. There's no doubt about that now. I'd be running a full risk position. Could I buy it here? That's the question. I think it's an exercise in pain. And, often I say in here, the leopard doesn't change its spots. And I think there's plenty of pain on that screen. But some people I'm speaking to right now, they love pain. So if that's you, you know who you are, right? Look at your portfolio. You know you love pain. Then I think you can buy this wholeheartedly. Let's go to King. King has a couple tonight, if I can. I sure can. Duratec starting to run again. It is starting to run again. And he's got two more. We'll do this one first. Yes, I think that is starting to run again. I think that's a really sensible assessment, actually. And I think this looks quite good. There's a little bit of a point of supply here, which could create some issues. We're certainly not looking worried about that at all right now. So if the market's not worried about it, then why am I worried about it? There's no need to be. So I think we're good. The only thing that's missing for me, King, is the little dink. So just think about whether you need a dink. Okay. What did you? Well, King will be telling his wife. What did you learn? Did you learn anything good in Carl's session tonight? Carl said, I need a dink. Oh, okay. Now, it might need to, I'd feel more comfortable if it did something like that, right? Came back and then sort of started to head back up again. But these candles are really good. That's good. I mean, that's neither here nor there, but that's very good today in what was a pretty average market overall. So maybe that candle in itself is the dink. You can see how it's come back towards the long-term trend ribbon. And that's what I'm after, really, when we're talking what do I need to see this dink for? Because up to this point, it's been very clear that this long-term trend ribbon has been an area of dynamic supply. It's been holding the price down. Not anymore, we think, but the confirmation will come from a move like that. Maybe I'm asking, not asking too much, but maybe I'm requiring too much, or I'm being overly pedantic here. I think it's fine. But, you know, we might also find better stuff today as well. Okay, where it's got everything we want. Look, I'm going to go, if I have it, full risk position, no question about it. It's coming good. I would question why you have it though, because you haven't really had a reason to have it up until today. If you don't have it, could you buy it? Actually, I think so. I'm going to go plus 1/3 because today's candle is kind of the intraday dink, if you know what I mean. So let's go plus 1/3 on that one. Let's go back to, and you don't have to be too pedantic, because the worst case scenario here is you're going to lose a bit of money. Not that you'll be wrong, but you'll lose some money. Your best case scenario is you might make a lot of money. Okay, we might lose a little bit, or we could make a lot, because we are disciplined and we know what our strategy is. We know what to do when we see it. That's not how most people operate. So if you think it looks good, then buy it. It's really that simple. AGL. Hey, if you're not disciplined, if you don't know how to do the strategy, then you should maybe not buy it. Maybe you should wait for the dink. Let's go back to normal. Always important to look at our normal zoom. This one looks very good. Certainly ringing a bell. I'm pretty sure I ran it in my shortlist maybe on that day, maybe. But it looks fantastic. FRP here, no question about it. No, nothing else to do, but hang on very tightly to every single one of the shares that we have. And if I didn't have it, I could certainly plus 1/3 here. I'm just going to hold that thought for a second and zoom out. Look, this is a long time ago now. You know, it's all the way back there in 2021, and we're in 2024. Might think, oh, that's not that long ago. Hey, we're in 2024. That's the end of 2021. That is by definition a long time ago now. So I'm not too worried about it, and we're certainly not showing any concern about it at this stage. So I'm pretty happy with this one. That is to FRP, or plus 1/3. Let me get that on the right candle there. That is the prettiest chart I've seen today. Hey, a little bit sketchy. You often hear me say, you get this sketchiness, candles that all trade in the same place on the same day. So I can certainly see that, and I don't want to confuse people. People go, oh, Carl didn't like that one. He said it was a bit sketchy. This one's got a great trend. Okay, yes, it's sketchy. I get that, and I have taken that into account, just so you know. But the trend is very, very good, regardless of that fact. Let's go to COV, which is Cleo Diagnostics. And I want to say in the past, wasn't it Coventry Group, the engineering firm, got taken over. I like this one. What did I say here? FRP. I wonder if it was that candle there. I kind of think it was, where I said, look, it's not enough in itself because there was no round number to push you out of a trade. Maybe it was that candle. That candle was definitely FRP. I actually think it was this candle, so I don't think it was that candle. But you know what? I would have said that anyway. Yes, we can see there's some supply there. We can see there's lots of supply there, but still, I think in the context of the overall trend, this sort of a move is still very likely. It turned out to be a little bit more than that, but not much more. It's coming back up. So look, I don't think that was a terrible call, is what I'm saying. And I'm hoping this won't be a terrible call either, but I think we're FRP here. If I didn't have it, could I buy it? Oh, look, I think I can, actually. I'm a little bit concerned about that. I mean, that's a pretty nasty point of supply, but it's not a major point of supply. There's no medium-term uptrend with lower peaks and lower troughs down this side. This is all one short-term trend. We've got lower highs, lower lows, and we never move back to higher highs and higher lows. And you might say that this one here looks a bit like a higher high and a higher low. We've certainly got a higher high, but the low is the same, okay? So that is not a new short-term uptrend. Remember the definition of a short-term uptrend, STUT, short-term uptrend equals higher highs and higher lows. So here we have higher highs, but the same low. So that is not a short-term uptrend. Obviously, short-term downtrend equals lower lows, yes, lower lows, and lower highs, lower lows and lower highs. That's right. So obviously here, lower highs, lower lows, short-term downtrend. Yes, short-term downtrend. My son's over here. He sits in on these now. And so you can see short-term downtrend, short-term downtrend, short-term downtrend. Still short-term downtrend, short-term downtrend, short-term downtrend, short-term downtrend. And then we go back to higher highs and higher lows, short-term uptrend, right? So the lowest point between a short-term downtrend, which is what's on this side, short-term downtrend on this side, and the short-term uptrend on this side, is what we call a trough. You could call it a trough. I like to call it a point of demand. How do you know it was demand? It rose from there. We saw excess demand. Obviously, the highest point between a short-term uptrend on this side and a short-term downtrend on the other side is the point of supply. And when we have rising points of supply, for example, here and here and here, and rising points of demand, for example, here and here and here, we then upgrade this. It's not a short-term trend anymore, rising points of supply, rising points of demand. That becomes the medium-term uptrend, which is, we say, rising points of supply and rising points of demand. And therefore, the medium-term downtrend is the falling points of supply and falling points of demand. But we should say that the point of supply equals the highest point between a short-term uptrend and short-term downtrend. And this will all be in the recording, obviously, that's why I'm doing it. And then point of demand equals lowest point between I've got slides on this stuff. I used to do workshops and the like between a short-term downtrend and short-term uptrend. And here's the kicker. You can actually go up a level, and you can go to a major. I've talked about this, haven't we? A major point of supply equals highest point between. Now we're going to go a medium-term uptrend and medium-term downtrend. I won't do the rest, but I think you can figure it out from there because you'll end up with long-term uptrends, right? Long-term uptrend equals rising major points of supply, right? And you can trade just with price action. Okay, so that long-term trend is effectively your trend zones here. It's hard to do that. It's hard to draw in all of these lines. That's why I don't do it. Not that I don't do it here. I just don't do it because drawing in all these peaks and troughs and then working out what trend you're in. It's all very valid, but it takes a long time. It can't be done by eye, and that's what my trend ribbons do. So you've got to remember, trend ribbons, they're just moving averages are lagging indicators like RSIs and all those other silly things that people use, but we're using them here not necessarily to make trades, but just to give us an idea of where that sort of natural state of the trend is, both in the short term and the long term, which we can't see on screen. But the reason why I'm using them, yes, they do tend to be dynamic areas of supply and demand, but that's more coincidence. That's something I've noticed after the fact. I originally started putting them on my screen because it took too long to do this price action analysis. Price action is coincident. It's happening with the price. Everything else is lagging, right? So obviously we want to use price action, but some aspects of that, unless you've got a programming, and you could program what I just showed you into the computer, and if you do it, let me know, and please build a little app that I can then put on my bloody Amy broker. I'd love you for it. But the trend ribbons do that visually with colour and help us to make instantaneous decisions rather than having to go through all this hard stuff. I know I digress there, but there's a little bit of education in it, both in terms of actual strategy you can apply, or technique you can apply, but also then philosophically speaking through the trend ribbons. Plus 1/3 is the net result of that. They are your three there, King. I'm going to pick up the pace, as I tend to say around at this time where I realise I've been waffling. Actinogen Medical. I can barely say it. I certainly don't know what they do, but it didn't stop me from running it in the feature charts there. I like white candles. What can I say? I need to get a t-shirt. I like white candles. I like white candles on big bursts of volume, even better. I'll probably print that on the back. So I'm pretty happy with this. Wasn't the greatest candle today, a little bit of indecision there, but certainly not enough, I think, to throw us off the trade. I mean, you see sort of that or that and that, then those three together are starting to be concerning, but I don't see it, right? And if I don't see it, why would I tell you to do anything but FRP? I don't know the future, but you know what you need to see to start to push you out of a trade. FRP, I don't think I'm a buyer based upon that last candle, but certainly happy to hold what I've got. Amber. We did check it a couple of months back. I can't remember specifically, but I did also run it in my scans over the last few days. MAU, I think this looks very good. You can see it's sketchorama, sketch to the max, but there's a decent trend there. I'm guessing it's quite illiquid, but if you're only little, okay, it shouldn't matter too much to you. If you're like Twiggy Forest or something, that's sort of the size you trade in, probably not the one for you. Let's go to the weekly chart. There's a little bit of history here. If we look at historical points of demand, that might act as a point of supply. 130 looks like it. And then, look, there's a little bit sort of in and around here, but then up to here. So it's certainly not, a blue sky trade. But these are pretty old, aren't they? They're going back a bit. So again, I would take those with a pinch of salt. Let me go back to here and say that I can't fault it. There's nothing there that would stop me from running an FRP if I had it. If I didn't have it, look, I could add a third, but just a third and not, I think, what's the right word? I don't think I'd be too committed to it. That's probably not the right way to put it, but, I'd be quite easily pushed out of this one. Because it's so illiquid, there's a chance that even a small amount of supply could come in and push the price down a long way. I don't know, it's not really my style. Maybe that's the way to put it. But, to each their own. It's got the green light from me if you like it or you like the story. Some people know what these things do. I don't know what they do. I do know what AGL does by the fact that it's a very well-known brand, and I think it looks fine. The last two candles, not ideal, but I still think in what's been a pretty average market, I think it's been holding up really well. And the short-term trend is still up, and it's still providing dynamic demand and doing it really well. That's up. I think we've still got predominance of white candles. And if I did draw the peaks and troughs in, that'd still be high peaks and high troughs. The last couple of candles, as I said, are disappointing, but not enough to push me off FRP at this stage. Could I add risk? Well, not on that last candle. That last candle's rather mediocre, isn't it? But I would say next white candle, high close, then I could add some more. So we generally say next white candle, high close, then we could plus 1/3. On that basis, let's go to James. Actually, James has got a couple of US stocks. We'll do those in a bit. Let's go to Medicus. Look, I'm glad we're talking about this one today. It is super interesting because obviously, it's like the perfect chart up to this point. I don't think I've run anything more times as a feature chart over the last 4 or 5 weeks. FRP, last time we were here, and that's under some pressure right now. I'm surprised I didn't say plus 1/3 because I probably would have verbalised it, but I might not have typed it on the screen. This is not enough for us to do anything about it because it actually turned out not too bad in the end, and this was good, and this is magnificent. And I would have said on Friday, this is just going to keep on keeping on. And today is a very disappointing candle. I'm hoping it's something to do with, as I said, this July 1 shenanigans that we saw today, where the best of the best from FY24 really had a tough day, and the worst of the worst had a good day. Possibly some unwinding of just fund positioning, end of the financial year, start of the new financial year, just closing out some trades. Look, I don't know. And again, to speculate is quite stupid as well because we'll never know and there's no point wasting the bandwidth on it. But I think there is a point here because, or is there not a point? Now I have to question myself because I could argue the price action is all that matters. And then I could also argue, well, I've been watching the market for over 30 years now, and I know some funny shit happens around July 1 and July 2, and we could see that this just prints a normal white candle tomorrow. Okay, so one of those two explanations is probably right. If you want to go explanation one, which is only price action matters, we've got problems, okay? Because that candle's not good, and I don't want to see it close beneath the low of that candle as well. This in and of itself is enough to push me out of 1/3, but no more than 1/3. I'm hanging on to the other 2/3 for grim death, okay? I just absolutely no reason, I think, to be out the whole position here. Not sure why that's not working, plus 2/3 remaining. Just want to put that on there just so we know what that means. I think we know what that means, but let's be sure about it. That's if you want to go down the path of only concerning yourself with price action. I think that's a perfectly valid thing to do. But if you like me and you go, well, I think it was a bit of just a bit of funny buggers today, I'm going to give it another day. I think that's okay too. But if tomorrow looks anything like today, then obviously we know what to do as well. That's for Adonis. Adonis has got a couple more ALL, which actually dodged the bullet today. I'm actually quite surprised this had such a good day, and that, I think, holds it in even greater stead up here. And just hovering around 50-50 is not a problem for this stock at all, is it? And I think that's very good also. And it is all blue sky from here, if I'm not mistaken. I'm not mistaken. There's absolutely nothing that concerns me about this chart. I think it's fine. FRP, if I didn't have it, I could add a third on to that one as well. No questions asked. Okay, how are we going here? Taking a bit of a pit stop there. Let's go to Yancoal. Maybe that's, you've typed in YAN, Adonis, but I don't think you meant that one. I think you might have meant YAL, which is Yancoal, which is obviously we've done. And don't panic if you tuned in late, because that doesn't exist. Let's keep going then to Peter. Peter's got MMI, which I think I'm just going to say, I think it looks pretty good. I haven't seen today's candle, but I'm just so overjoyed to see that, because I know a few of you are probably on it, and isn't that wonderful to see that move in that way. Let's go back to here, because obviously I've drawn this in the past as well. You know, early 2021, it's a bit old, but you know, we just want to keep our wits about ourselves when we get there, and just be mindful of what sort of candles we get in there, and we're going to see that in the next couple of days. There's nothing to do. In fact, I don't think there's been any reason to push you out of FRP on this. So happy with that. FRP again, and this is a plus 1/3 this time, because I'm very happy with that last big white candle on volume. Let's go to DUR, which I'm pretty sure we looked at. We said that was the one turning around. Doesn't need the dink. You could argue it could, but I'm going to go plus 1/3. A1M, is this turning around? And I'm not so sure about this one. It's a cheeky trade. Cheeky trade because of the point of demand that's forming down here at 4.2 or 42. And is this a major point of demand? Well, I'll tell you when it will be a major point of demand. So if we can close above there, all things being equal, based upon the current price action, what that will do is turn this current medium-term downtrend. I'm being very careful where I draw these in, because we actually get a high and high low there, so that makes that a point of supply. And then we're coming down to here. I don't know which one's lower of those two. I think they're both the same. Actually, if I hover over here, it will tell me. You can't see this, 40.5, so it doesn't matter. And then we go here. These sort of down, and these are inside bars, and then we get a little up there, and we're going here. We don't know where that's going to end, so let me just put question mark on the end of that. Okay, it will end at some stage. Now, assuming that this closes above this point here, which is now that point there, so we call this the point of supply, and that equals 0.47. When we close above 0.47, we know that the next peak, the next point of supply, must be higher than this one. So if we're trading at 0.475, and the very next day it crashes to 30 cents, it will form a peak above 47. It will form a peak at 0.475. So that peak will be higher than that peak. We already know we've got higher points of demand, and therefore, as soon as we trade, it doesn't have to close above, the day doesn't even need to finish. as soon as we close above, as soon as we trade above 47.5, we are now in a medium-term uptrend on this side, medium-term uptrend on this side. We know we're already medium-term downtrend on this side, medium-term downtrend on this side, which then will promote this to a major point of demand. Okay, so just pulling you up there, Peter, on your interpretation, because you've called 42 a major point of demand already. It's not yet. Okay, but I think this is kind of, that's not a waste of my time to tell you that stuff, because I think it kind of, for me, tells me where I kind of want to trade this. And I would say on a close above 47, nice big white candle, a little bit of a push in volume to show some supply removal. And that's for me when it's starting to turn around, because I think we really are confirming not only do we have the building demand that's evident from those rising points of demand, but we've got the supply removal we want to have also. And of course, when we have removed supply, if there is a supply vacuum and demand is still enthusiastic enough, that's when we can have excess demand and price must therefore go up. That is just economics at 101. So happy holder, well, that's not even the right word. I don't think I'm a happy holder here. I'm a nervous holder because it's a medium-term downtrend. That is a MTDT here. It's a misprint. There we go. So I think a nervous holder, you can hold it. You're not me. I wouldn't be in it, but it would start to get interesting for me on a close above 47. Let's go to Francine, who wants Woolworths, which is okay, actually. I think this is actually really neat, because I think this might be the first aggressive setup that we've talked about here, and maybe here, that has actually gone on with it and is now transitioning to a turnaround setup. So that's very interesting, because and the difference between the two is obviously we're not in the dark pink zone here. We're not in the short-term the long-term downtrend, trying to turn that around and turn it from dynamic supply to dynamic demand. We're beneath it. We've really only built a base. You can see the base through here. It's a pretty small base, to be fair. Well, I guess between this and this, it actually is a pretty decent base. Obviously back to rising peaks and rising troughs, well, kind of eventually, by here certainly. And then some really nice candles coming in. A bit of volume also. You can see I've sort of pointed to that one. I'm not sure where that's pointing. To that one there. And then we're actually seeing a little bit of a decrease in volume as the price goes up. And that's good too, because it's showing there's just less supply in the system. What was this one here? A bit of a burst through here. Not sure what that is. Might have been options expiry, to be fair, just sort of looking at the date. This is a wonderful candle here. Good candle, not so good candle, not so good candle. I don't know, maybe a little bit of a victim of its own success over the last few weeks. As I said, some of those better performing stocks over the last few weeks, and sectors certainly. Staples has been one of those, had a bit of a pullback today. I would suggest to you that this is very close to being an ad risk on a turnaround setup. Unfortunately, today's low took out the previous point of demand, right? So we are actually going to be lower points of demand now. I think it's going to take a couple of nice white candles at least. So something like this, and this. Two of those side by side, closing around $34, and then that's a plus 1/3 for me now, because it's a turnaround play. Turnaround plays and continuation setups get plus 1/3, whereas aggressive setups only get plus 1/6. Okay. Let me just articulate that a little bit. I'm going to say close. Let's do white candle high close near 34. That's when we are looking to add the risk on that one. Okay, but happy if you've got it, happy to hold it from here. A great case study actually for how we move from an aggressive setup into a turnaround setup. NXT. Which is having some problems here. Look, a great trend, certainly. Exemplary up to here, can't fault it. This 1, 2, 3, 4. Once we kind of get into maybe this candle here, I'm starting to get really concerned. And this is a tricky one. I would have said on any black candle low close. So we talked about white candle high close. So black candle low close. That candle, it would have been managing risk minus 1/3. Do not ask any questions at all, just do it. That candle didn't warrant it. Certainly not that candle, and even today's candle doesn't warrant it yet. But I'm going to write on this. So black candle, Black candle low close, minus 1/3 if that occurs. Otherwise, I'm still happy to run full risk position from here. But, you know, it's just taking a bit off the table if that occurs, because obviously the long-term trend is still fine. And let's do a BHP, which is a tricky one. I might have noticed it's been conspicuously absent from my downtrends list. Not a coincidence. I've been keeping it off because this is just such an immense area of historical demand. It's not something I want to mess with by trying to go short. I think that would be extremely foolish. So with that in mind, the trend is not fantastic, but I certainly would want to short BHP down here. I need a bit more to go long, but not that much, because that's demand. You know, 4 out of the last 5 candles I think are strong demand candles, and you know, we're flirting with the dynamic supply of that short-term trend ribbon. I think a close above that would be good. I think I could probably add a cheeky 1/3 on a you know, white candle, not 1/3. Sorry, I misspoke. So white candle high close plus 1/6 aggressive setup here, on the basis of we're turning off just the most immense historical demand zone. And I think it's warranted trying to fade that move and taking a little bit of risk here. And then we would just see how it goes, and it might end up as a turnaround place somewhere around here, and we might be, you know, adding a 1/3 there or something. We'll see how we go. But next white candle high close, happy to go. Look, I said next white candle high close above the short-term trend ribbon. I think you could almost just go on it, you know, 4 out of 5 white candles. But it's only a 6th, and we know where our bug out zone is, right? It's a fairly tight stop. It's a small risk for what could end up being, you know, if it moves back to the top of the range, you know, a really huge reward here. So it's just being sensible about how we're applying risk to the market. Let me remove that. I think I'm talking myself into this. It's an aggressive setup. I'll certainly write that on the screen. Aggressive setup plus 1/6. Toe in the water. That might surprise you. Perry's got some US ones. We'll come back to those in just a second. Michael's got Cat. I should say don't put any more in. So I know Nicholas STP is the last one today. Again, for you, Michael, disappointing. It was looking amazing before this. Right here, it's, you know, you just want to buy the hell out of it. Friday was a nothing day, but it was a nothing day in the market. And then today, I think, again, a victim of the high flyer syndrome on July 1 today. So a bit like the other one we looked at, Medicus. I want to see the 2 July candle and see how that turns out. If we get something that's sort of closing, black candle, low close, really down there, certainly there's you have to do something about it, in my opinion. But look, it's still FRP for now. If you don't believe me, let me write that or reiterate that on that last candle. Let's go to your next one, which is DUG. It looks a little bit like that other one we thought was turning around. What was that one? I can't recall. And that's the risk. It's slightly higher risk going with a turnaround setup than something that's bottom left, top right. This still worries me. I don't recall if I put it back in the list, but yeah, look, that's a bit of concern. There's some decent supply up there. So if we see it come back in at a lower zone, at a lower level, I think that's a bit of a concern. So that's definitely an impulse up there. And if we make another impulse here, and I'm just going to put a question mark after it, that's when I think we've got real problems. I'm guessing there was some news today, but look, there are some good things. We didn't close beneath that. The demand did come back in, and then we held at the long-term uptrend ribbon. So, you know, two points of demand. That point of demand there, and of course this is just one big point of demand, came in and worked for us to keep the price relatively stable. But there was a bit of damage done. I think I'm managing risk on a black candle low close beneath that point of demand. I think that is a problem, given that we're potentially making it a second lower major point of supply. So that could be minus 1/3 if that occurred, and then for me, if you saw something that did that and took out this one here, then I think we're in a great deal of trouble as well, and that would be minus 1/3, or you'd really struggle to say there's a risk to still be in it after that. But we're looking ridiculously far out into the future. 2 candles in the future is ridiculously far out. PNV, I must admit I didn't see that today, but no surprise. I could have just picked that was going to occur. Not sure what we said on that day. It's interesting, isn't it? A white candle there. I don't know what happened on that day. Or maybe I was telling you if you saw the white candle, you could go another 1/3. Didn't quite see it there, but certainly saw it here. Not sure what happened on that day, but it certainly came back pretty well after that. It is concerning. It also gives us a really clear-cut level beneath which to act as well. So I think pretty straightforward here, actually. Full risk position up to now. No questions about it. It looks like it's another victim of the 1 July shenanigans, and let's just say that close less than minus 1/3. Pretty straightforward. Okay, we're going to do Lindian Resources, which I know had a big pop today. It is a big white candle. It did close on the high, and there's a whole heap of volume. We're dealing with this now, and we're dealing with this. There's so little to go on here. Okay, this is there's only so much I can do, right, without a crystal ball. So clearly, if we extend that across, we can see that we're pretty close to it. Okay, this is a major point of supply, quite clearly also. And yeah, in terms of reward to risk, we're very close to that major point of supply. That's a negative. Let's look at the positives. That's one negative. The other negative is the almighty long-term downtrend ribbon. The positives, there's 2 of them at least. Giant white candle, big burst of supply removal. Okay, was it enough to remove the supply up here? That's the question mark. They certainly closed without fear today. I'm going to say this is a bit early for me. Okay, no doubt this will come up on my scan list today, and I think I'm going to go past it. I don't think this is going to get shortlisted, and it certainly won't become a feature chart. That doesn't mean it can't go up. There's every chance it can go up also, right? Because of the 2 good things. But I have to draw the line somewhere, and I have to be disciplined, and I have to just follow my gut sometimes on these things and say, you know what? If this gets to 18 and with another big white candle, I'll happily buy it. Like it's 15 now. If I pay an extra 3 cents and it ends up going to 36 or 37 or 40, I won't care. The bottom line is you can do whatever you want to do. If you can make a case in your brain to add some risk to this, I wouldn't complain, because I can see why you would do it. It's not my cup of tea. And that's my final word on it. So no, I wouldn't buy this myself. But I can see how it can go up. But I know I'm going to miss stuff. That's the point. What about this one? This one is super interesting. I think it was sort of gearing for a turnaround play not that long ago. Let me do that and zoom in a little bit. Doesn't look to have got going, and it's not that it's been awful since then. It's just been very sideways. I think it's fine. I think we can just maintain this at this point, because we are seeing some nice candles coming in at the point of, the dynamic zone of demand. Today's candle is perfection. Can't complain about it at all. Look, it all just looks like it's just kind of holding that long-term uptrend ribbon. I could certainly hold it. Could I buy some more? Look, I think if you bought in the first time, I think you got enough for now. And I think you want to be, let me get rid of that. I think you want to be adding only, and I'm always all for adding to a winning trade, but let's try and add on a break through that level, I think. Okay, so next white candle, so let's just go white white candle high close. Next is implied plus 1/3, isn't it? Would be the way I would go about that one. But FRP on what I've got for now. Okay, let's do STP, and then we're going to switch over to US stocks. Oh, I just did STP. I just did STP, didn't I? There you go. That's good. I don't have to do it again. Let's flip over to the US stocks. Going to head back up the list. So anything you type now, unfortunately, I won't be able to see because I'm scrolling upwards. Let's go to here and to here, here, or here. Eventually, right there. And let's go to the first one, which is Perry, who's got ACIW, ACI Worldwide. Wonderful chart. Stairway to Heaven. And, you know, there I am sort of talking for 5 minutes about Lindian Resources when I could spend all of 30 seconds talking about this one. And that is not by no way suggesting that talking for the 5 minutes means that one's better than this one. If you can say everything you need to say about a stock in 30 seconds, that's the one you should be buying, or that's the one you should be selling, right? Because this one's just so clear cut. It is a picture of excess demand, short-term uptrend, long-term uptrend, rising peaks and troughs through there. Yes, it is, and obviously boosting through this major point of supply here, like it's not even there. A little bit close to 40, as in we're within 5% of 40, so we're actually playing the round number right now. Assuming, of course, it's the first time we've been there. It isn't the first time we've been there, so 40 is completely irrelevant. It's not our first rodeo at $40 at all. But there is a bit of a point of supply up here, Perry. I don't know if you saw it. It's a little bit old, all the way back in early 2021. But yeah, look, just keep an eye on how it's performing in there. It's not going to let me do it now. Isn't that annoying? There we go. It's just where it placed. I don't know if you can see that, where it placed that on the top of where I wanted it to go. So let's do that and do this, and it just puts it into perspective for us where it might be. There you go. But A, it's a long time ago now, and B, we don't seem to have a care in the world. So happily, FRP on this one if I had it, and plus 1/3 if I didn't. Happy to add some risk on that one, assuming you've got room within your risk management model at this point in time, your portfolio management model. Perry's second one is CNK, Cinemark Holdings. Oh, that's, I love this big move here, shallow pullback, 2-day pullback. That's all it can pull back. You think about what it tells you about supply in the system. There's so little supply. Ladies and gentlemen, I have an economics degree. I've got the letters after my name on my business card, and I remember Economics 101, Octagon Theatre, UWA, and they taught us about supply and demand. And they said that when something goes up in price, the market will tend to supply more of it, right? More supply will come out. This went up a whole heap in price, and there was even less supply. There was no supply. What does that tell you? Price and value, right? The price went up, but the value didn't change. It was still cheap in the eyes of the market. Okay, see, the basics of economics suggest that when the price goes up, the value must go up, or it must become overvalued. That's not how the stock market works, right? Because earnings are not fixed. Earnings can change, and they can change incredibly for the better very quickly. And yes, the price went up, but so did the expectation of this company's earnings. Now, are we getting into fundamentals? Or are we just getting into how the market actually works? I don't know what the fundamentals are, nor do I care. So I guess we're not really getting into the fundamentals. Let us go back to here and say that, okay, it's a bit of a turnaround play. That's surprising. I actually thought it was going to be a blue sky one. A little bit like the last one, Perry, late 2021 into sort of mid and early 2021. There's some stuff there. I'm not going to draw the box on screen because, like for the last one, it's a bit of a ways away. We certainly don't seem to be caring about it, and it's a long time ago as well. Okay, so there's nothing in this chart that I don't like, which means there's everything in this chart that I do like, which means that we would naturally therefore go FRP here and plus 1/3. And we've got a little bit of an economics refresher in the meantime as well. Let me save that away. Let's go to Perry's third one, which is SFM, which is Sprouts Farmers Market. This one rings a bell because I'm sure we've done Sprouts Farmers Market recently. I can't see any markings there, so maybe I forgot to do it, or maybe we didn't do it. But this is going to be ditto for everything I've said up to this point. FRP plus 1/3. And I bet you this time we're going to find, when I zoom out to the weekly chart, there is absolutely nothing keeping this one down. And I'm right. It looks even better there. So no complaints for me on that one. Thank you, Perry, for those 3 wonderful setups. Really appreciate it. Let's go up the list now to James, who's got BTDR. That reminds me I need to do my offline requests as well. That is the daily chart. So we can see some good things happening here, no doubt about it, but also some concerning things. These 3 upper shadows, they're problematic for me. So they're indicating quite a bit of supply that's just working in around the system. But, look, short-term uptrend, long-term trend is trying to change. Some decent candles through here. Plenty of volume. So we've got plenty of supply removal. There's plenty of supply to remove. But also, I think, a bit of churn in here as well, which is a bit concerning. It's not one that I would naturally gravitate towards. I just think with those 3 shadows. But what it does give you, actually, when you think about the supply that is working in the system here, so it's so tangible that supply is working there, and there's quite a lot of it. Hey, there's lots of demand, but there's also lots of supply. The good thing is that if we can snap that supply, we know there's lots of demand in the system. So look, if we can get a close above the high of those shadows, then I think you can go with it. And look, I can write on that one. Close greater than shadow highs plus 1/3. Look, and maybe it's a 1/6. I don't know. Maybe it's a bit more aggressive, perhaps. But only on that basis could I entertain this one. Again, it should still be, it has to be the best setup you can find, okay? And you're also going to have points of supply or latent supply not too far away, even if that close above the shadows occurs. But hey, I'll leave it to you on that one. If you know the story, you like the story, maybe that's why you're just waiting for the technicals to line up, and that would be the case if that occurred. FTAI Aviation. This is far more clear cut. Certainly FRP, based upon wonderful trends, wonderful candles, wonderful price action. I can't fault it anyway. So FRP. I don't think I'm going to add the 1/3 on the basis that last candle just doesn't warrant it at this stage. We've seen a little bit of a push up there. Obviously 100 isn't an issue anymore. In fact, what's interesting about this one is I reckon that's the first time we've been to 100. There you go. And at 100, has absolutely had no impact on this at all. And I don't think it's a case of sort of a belated realisation. I just think that's a candle that's a consequence of the crappy broader market that we saw in the US on Friday. But that's still a monster. So FRP, but just not adding 1/3 at this stage on that one. Let me do the offline requests. I've got 3 from Jason SF. Which is Stifel Financial, which I think looks very good. I've got a really nice big white candle there, big volume, and let me just double check. And all blue sky here as well. So really, I can't fault this one. This is a very strong setup for me. So we'll go plus 1/3. FRP if you've already got it, and plus 1/3. Jason if you don't. And let's go save on that one. Jason's next one, coincidentally, I noticed when I looked at these before we got started today, SYF. I hate it when that happens. SYF is Synchrony Financial. So we've had Stifel Financial and Synchrony Financial, and I'm guessing looking at the charts, they're very, very similar companies. Okay, so just if you're going to do both of them, understand if you're adding 1/3 across both, you're kind of really adding 2/3 to kind of the same trade, aren't you? So I don't mind it. Just go into it with your eyes wide open, because if they happen to come a cropper, right? They're both going to come across probably at the same time. If they're both going up at the same time, they'll probably both come down at the same time. FRP here, plus 1/3. No questions asked. You can tell by my lack of ability to type now that we're getting close to the end of today's session. Let me click save on that, and let me also prove to you that this is. I can't prove to you it's blue sky. I thought it would be similar to the other one. It's not. But again, look, long enough ago not to be too concerned. We don't seem to be concerned about it now. $50. It's not our first rodeo. So look, that's fine with me. But not to say I won't be watching the candles very, very closely when we get there. And that's really all we're committing to do now that we know that major point of supply is up there, that latent supply. So Jason, your third and final one, he is saying is $50 going to be an issue? And I think I've answered that one. I don't think so, not this time. And coincidentally, Jason has ACIW, which is the one that Perry had. So we're great minds are thinking alike there. Perry's saying, will 41 be an issue? And I'm not sure why 41 will be an issue. Oh, sorry, it's this one here. I thought it might have. I know Perry gave me some that were blue sky. This one clearly isn't. So Jason asking the perfectly valid question, is 41 an issue? And I think I did explain that when I discussed it on the basis of Perry's request. And I said, no, I don't think 41's going to be a big issue there. David's got CRM, which is Salesforce. And have a quick look on the weekly chart, obviously, to give us some perspective, but we'll head back to the daily. This one is still a work in progress. I know David's asking, he's giving me an explanation saying there's 3 white candles. There are. The last two's got some upper shadows in the, obviously, the supply zone there. 311 is a long-term point of supply. So I'm guessing that's up towards the top there. Short-term trend is trying to turn up. Yes, it is, but it's still very early days. He's saying there seems to be mixed information. I think that's probably all we need to say at this stage, David, and then move on. Can I clarify, especially significance of white candles with upper shadows? Is this a turnaround? Yes, this is the closest of the 3 setups I have: aggressive, turnaround, and continuation. This is the closest to a turnaround setup, and there's lots of good stuff happening here. Okay, we have rising. Obviously, there's rising peaks here. That's a little bit of a lower trough forming, but then moving back to higher troughs, I want to say here. Yes, a little lower high, lower low, yes. So price action is good. No complaints about that. What I should have done last week is figured out how to draw those lines. And I don't think anybody told me how to draw them last week, did they? The continuous lines. I ended up drawing the brush. Let's do the brush. There we go. It's kind of. I think this is freestyle here. There we go. High peaks and high troughs. And the candles are very, very good up until these 2 upper shadows that you've correctly pointed out. And why those shadows are occurring. There's 2 reasons why they're occurring. We're in the dynamic supply zone. And previous points of, there we go, those ones there, those previous points of demand are starting now to act as major points of supply. Okay, isn't that funny how stuff just works sometimes with this model? Previous points of demand, people are buying, they're crying. Buying, crying, praying, relieved that we're nearly back to break even. Buying, crying, praying, relieved. So some of them are going to turn into supply, and that's what we're seeing here. David, I just think there's just too much that needs to happen here, and maybe let's look at it in a week after we might have seen something like this. You know, that the long-term trend ribbon is going back to offering dynamic demand. Okay, and I think then that's when I'd be more interested. But you know, you've got several parts of the equation up to this point. Let us keep moving. I've done all the offline requests. That is excellent, and I reckon I'm pretty close to having done all the online requests as well. In fact, I'm pretty sure I have, because I did FTAI, didn't I? FTAI Aviation, did that one. So that's it. I'm quite certain that's it. Yeah, I'll give you a last chance to not necessarily ask me any new ones, but just remind me if I did miss something that you have put on the screen, please. Roscoe saying it's going to be a replay early morning for he's bowing out. No worries. To draw trend, click on paintbrush iron, then path. Okay, you're a genius. Thanks, Viraji. You're a legend. Look at that. Watch this. There we go. That's what I want. Look at that. Thanks, Viraji. I'll know that for next time. Okay, let's head back to the PowerPoint presentation and just remind you that everything we discussed this evening is general advice only. It has not taken into account your personal financial circumstances, situational, personal objectives, needs, all that good stuff that you need to consider before acting upon any of this information. If you're unsure, the best thing to do is go out and seek the help of a financial professional. Always remember that trading and investing is risky because we don't know the future. We could lose money. It's always you who's responsible for the stuff you do and not I. But I am going to be here no matter what to try and help you through it. But if in doubt, you know what to do. Keep calm and follow the trend. It's been a pleasure chatting with you this evening. All the best for your trading and investing until we catch up again. Bye-bye for now.